Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. Hope you're having a fantastic day. We're taking another look at Bitcoin, helping understand best practice and big picture. Obviously, we've got some decent stuff to cover here today. We're going to see if the Fibonacci retracement levels are going to hold up and kind of how far this pullback could be if it were to continue further. I'm speculating we might see a little bit more, but for the most part, I think we're over the hill. And what I mean by that is just that we should likely see higher highs and higher lows in the next coming weeks. Again, too early to tell, but we need some confirmation. We're going to look for that as well. If you are new to the channel, just know I'm not a financial advisor. Love teaching people to trade. You want to become a better trader, CryptoCache.tech is the site. I have a trading community. We all learn and grow together. Have lots of awesome discussions, and there's also signals as well. We just took 133% from Ethereum in roughly about 72 hours. And I can tell you that it's been a positive experience. Generally speaking, though, you do get a lot of benefit with that, and it's just nice to have a community to at your back. Furthermore, too, I also have a $10,000 prize pool through Bitget. If you use the link in the description below, you have the opportunity to be able to benefit from that monthly. And it's really simple. You just use trading volume and or profit and loss ratio, and you can qualify. So it's really, really cool. Be sure to check that out in your own time. So here's the thing with Bitcoin. Simply put, we're at about 17,000 at this point. We broke through, kind of tested the level with 17,300 and got rejected. Okay, so these are all Fibonacci retracement levels that we're seeing here, whereas the price action will wick up to a specific point and then pull back. Okay, so it's a very common characteristic. What's also common is this most recent support level here, or previous resistance rather, at 16,800 is likely going to be the most relevant support moving forward. So in other words, we should expect that to hold or put up a fight if the price were to come back down any further. Okay, and the reason why is because that was a previous high, and in turn, that is the new essential low. That's the concept there. At least in order for us to maintain higher highs and higher lows, we want to see that if that level is retested, see it at least hold and continue higher. Okay, that's the goal, that's the idea. So anyways, that's where we're at there. We are getting rejected off 50 on the RSI. That's standard for the first attempt. Just like a cup and handle pattern where you got to reattempt a couple of times, is very standard for that to get rejected initially. So not a major cause for concern, but that does kind of reflect that we have a resistance level there, and that there is potential for the price action to pull back further because it got rejected there. Okay, so again, just reiterating the simple fact that the range between 17,000 and 17,300 is a pretty significant resistance area. Okay, so again, not bad, definitely not something that we are upset with by any stretch. What we do love to see here is that the MACD is still basically converging to the upside, so it's really awesome to see that. Momentum is continuing, and ultimately, as long as we can continue to maintain that momentum, we should be able to break through 50 on the RSI and then allow for it to consolidate at that level. So again, mostly good stuff there. Let's see where the 50-day SMA is at. We are seeing it trending right around 18,400. So again, we're a little ways away from that. The likelihood of breaking above 50, at least the first attempt, just like 50 on the RSI, is a low probability. You got to keep in mind the number 50 in trading or cryptocurrency in general is a very common occurrence. So I would just say respect RSI at 50 and also the same thing with the simple moving averages. Again, just a general rule of thumb, they're both very strong, specifically on the daily. Now the 4 hour is a different story. They're still relevant, don't get me wrong, but the 20 and the 50 are below the price action right now, working as potential support levels, where we got to worry the most about this 200-day simple moving average right there at about 17,900. Again, something to consider, not the end of the world, but generally speaking, we're going to have a lot of resistance in the 18,000 range based on those moving averages. We can see the RSI is tapering off a little bit, which is nice. So between 50 and 70 on the RSI is perfectly fine. It's actually where you want to be, just above 50 and just below 70 in any normal circumstance on the 4 hour. That's my sweet spot, essentially. I don't really like it when the price gets above 70 on the RSI on that 4 hour. It screams a pullback. Speaking of pullback, we could see one soon. We're starting to lose this momentum. So unless this can kind of do a little bit of a bounce-a-rooney there off of 50 on the RSI on the 4 hour, we should expect that to continue to diverge and potentially go to the downside. Now, again, it doesn't necessarily mean it has to just, when it's coming down, it's going to automatically, come down far. We very well could see this diverge and just barely diverge and just return fire. Okay, so try not to think that this is an end-all, but it is an indication that the momentum is shifting a little bit. But it makes sense if you look at the overall projection here, basically what's happened here so far. So if we take a look at the continuation here, for example, even though we've gotten some resets, we did hit a 9 here recently with a 4 hour continuation to the upside. Okay, so roughly 36 hours of continuation to the upside is essentially just a case in point where the price action has to pull back somewhat. Okay, so again, a sweet spot would be the price to come back down here, bounce off 50, and continue higher. Whereas we'd have that nice little push to the upside that would establish higher highs and higher lows continuously. But for right now, it's no surprise we're seeing a pullback based on that metric. Okay, so again, just some things to kind of think about. How far is it going to pull back? Well, to me, I would say the initial interest level would be 19,800. 19.8 should be the lowest point we're going to see. If it continues lower, we're going to be establishing lower lows, and at that point, we have to have a different conversation. But until then, we can anticipate that's going to hold just based on previous resistance patterns. Okay, that's generally what we're looking at there on the 4 hour. Let's take a quick look at the 1 hour and call it a day here. We can go ahead and see on the 1 hour that we have a decent amount of sideways action. Okay, so even though we probably came up to a 9, which actually it's more so like an 8, we've got some sideways action here, but this is almost a perfect pattern in a lot of ways. And what I mean by that is overextension plays. In other words, when you decide you want to consider shorting is when you see 2 9s in a row on the 1 hour. So in other words, we have a 9 here, as you can see, goes sideways from there, consolidates, increases. We see another 8, basically a 9, and the price is going consolidating sideways. Now it's natural for the price to consolidate after hitting an overextended state. But what's also natural is if you have those overextended states happen 2, 3, or 4 times in a row, the likelihood of a pullback becomes greater. Okay, because again, what goes up must come down. Greed is a very real thing, and they want to go ahead and take their profits, whomever has a lot of whatever it is that you're trading. In this case, the whales have a lot more than we do, and we got to respect the fact that they're going to take their profits, which is exactly what's happening here. Now, bear in mind, I mean, traditional markets are kind of drawing dead. It's not like it's an amazing, market right now, but it makes sense because Bitcoin was up yesterday when the traditional markets were down. Now traditional markets are going sideways and Bitcoin's kind of selling off a little bit. So that being said, we're not in terrible shape. We're mostly positive, but we are absolutely in a situation here where if you have a long position, you may want to consider trimming your position because the lagging span is going to intersect with the price action here. Conversion lines above the baseline, that's very positive. That shows we have momentum still to the upside. That reflects on the 4 hour. But also, we are above the cloud here too. So again, the cloud is trending right in the range of 16,800 upwards of 17,000. So this is a support channel here for us. And in turn, we got to learn to, if you're going to be shorting, make sure your profit target is just above 16,800. So 16,850 or something along those lines. That way you can get in and get out if you need to. I don't recommend shorting at this point, honestly. To me, when you have these momentous types of trends, shorting into it is it's very risky unless you're just day trading and you're using smaller time frames. Again, the trading style that I have isn't necessarily built for that. Even though I've done plenty of day trading in my day, I don't like sitting here watching the charts all day long. That's just my trading style. That's why I set it and forget it, and it's okay. But again, if you are day trading, you want to probably pay attention to standard deviations and see kind of where we're at. We are overextended to the downside, so pull back to the upside would make sense, considering the last 24 hours of volume is implying that the current amount of volume that we have, the price should literally be at 17,100, but it's not. It's outside of its deviation, and in turn, we're going to likely see somewhat of a pullback. Again, this may not come all the way up. It'll probably come up to get rejected off the VWAP line, and in fact, if we continue lower. But once again, still something to consider, okay? Doesn't mean we're just gonna see it turn itself right around. We are at lower lows and lower highs on the 15, but we can see some funky candle wicks here, and it's kind of implying that there is a lot of selling pressure right there at about 17,200, okay? Again, just some things to kind of be mindful of. We need to consolidate a little further before we expect any further legs up. So I wouldn't anticipate us having a green day today. It wouldn't make much sense. We should probably see maybe a little bit more red down to 16,800. Hopefully consolidation at that support and increase from there. That's my goal, is to potentially buy the next dip. So 16,800 would be on my target list there for a potential drop in price and to catch that potential bottom. Again, potential is a key word because we don't have confirmation yet. But generally speaking, that's what we're looking for. So in the next 24 hours, I'm going to go ahead and consider taking that entry there, and let's go ahead and set an alert right in the 16,800 range and make sure that we get notified of that occurrence. Okay, so again, that's where we're at here. All well and good for the most part. I think mostly positive, but this pullback makes perfect sense. It's very standard stuff. So try not to overthink it. All right, well, I hope you learned something here today. Of course, if you want to become a better trader, again, CryptoCache.tech is the site. You want to use a phenomenal exchange, Bitget.com, or more importantly, use my link so you can qualify for that $10,000 prize pool monthly. Look forward to working with you. Have yourself a great rest of your day. We'll see you next one.